Ira Epstein with your morning future subscriber video for this Friday, December 12th, 2025, just getting on to 6:25 a.m. Central Time. Last night I had a problem. We couldn't get voice to come through this computer, no matter what we were doing, and finally it came on, but it was so late. I had recorded all three videos for the evening wrap-up. There was no volume in it, yet it looked to me when I was doing it like there should be volume. We still do not have, and we're nowhere near setting up my studio yet. I'm hoping to get it done next week, but it's one thing after the other. It's just a matter of making a move that you haven't done in 30 years, and it's quite complicated. In terms of news today, you're going to get three Fed members speaking, bank presidents. You've got the Philly Fed Bank president, the Chicago Fed, and the Cleveland Fed Bank president, all speaking, but starting at 7 and 7:30. And then we're going to get the U.S. monthly personal income spending and PCE price data for October, and that's going to come out at 7:30 a.m. In terms of trade wrecks, last night in the written update, I told my clients take half profit in the Russell 2000 at the market. Phil should have come in at least at 25.99.70, if not a bit higher, because the market was moving up from the time that I had put it out. It's right now pretty close to what is that, 25.98.20, so it's not too far away. You're to hold the balance using to be out. If you lose the bullish embedded reading by closing under 79, you made roughly 81 and a half points for $407.50 approximately. Next, a new trade recommendation in the E-mini S&P 500. As you can see, prices are at 68.97.75. Buy at 68.45.75 as long as 69.29.25 is not hit first. Be out if on the settlement the embedded slow stochastic is lost by it closing under 79. Take half profit at 70.06 and hold the balance with a break-even stop. So as we look at the market, you're again under pressure in the NASDAQ. As good as Broadcom's report was last night on earnings, and I didn't think it was bad. The fact that their margin's going to drop 100 basis points, the market didn't like that, so it's punishing that's carrying the other AI stocks down a little bit with it. It's not the case in the Russell. It's not the case in the Dow. In the S&P, I don't know what it is, but it does have some of these AI stocks, so that's where you're at with that. In the bonds and notes, where you're adding back some yield today, and the dollar getting a little bit of a bid back. It is Friday. If you read my newsletter, if you get the full research, I said it's Friday. You're probably going to see some profit taking, and I'm not surprised to see it. In the metal markets, you're continuing with the gold on a tear to the upside. The next objective is the all-time high, the 44 and a quarter area. Look for that. And probably the 5,000 level somewhere in 2026. I don't see the banks stopping to buy for their central banks. I think the dollar, as I said, with the new Fed policy, will stay weak. And I think geopolitical tensions aren't going away anytime soon. So those are the things I'm looking for there. When we come to the ag markets, you're just unable to pick up the beans. There's really no business taking place. And this word that, China's going to keep buying, where is it? So the farmer is caught right here. He certainly on rallies wants to sell, and he's not going to be a buyer. So you're just caught right here with the market, too much supply and not enough demand at this point. When you take a look at what's going on in the energy markets, I'm going to repeat, I don't see anything positive. I don't know what the deal is with the U.S. Capturing that Venezuelan oil tanker. I think there's a big shadow fleet of some type in Venezuela. And the question is, do they dare venture out? And that's probably what they're not going to do. So the U.S. has sent a message that financially they're about to try to strangle Maduro into giving up power. I'm guessing that's what's in Trump's mind. Do I know? I'm not part of that game, but it makes sense if you think about it. He wants him out of power. When we look at the S&P, you can see you had a huge outside day up yesterday. So the one thing I don't want to see happen is taking out this low. But again, if you've taken my full charting course, what rules the day is this, the embedded slow stochastic reading. And I know yours doesn't look like mine. If you're a subscriber, obviously you are if you're getting this, but then we have trial people. We don't give the formula to people on trials. We only give the formula to people that are paid subscribers, and I won't go into your computer and change it. You have to do that. And what it is not, just so you know, it is not these sets of numbers. It has nothing to do with this at all right? It's in the formula behind it. But suffice to say, what the market does here is as long as it stays embedded, I think you're a buyer. And how I came up with the number here, 68, 45, 83, all I did is round down because when you get there, you're probably even going to be under that a little bit if you get down there. The Dow is not a buy because it made a higher high today, number one. Number two, is it embedded? No, you don't always have to be embedded. But if you're not embedded and you're up like this, you're overbought. Overbought keeps me away from the market. Day one of embedding, day two was yesterday. Today could be the third day. So the Santa Claus rally is certainly trying to get itself going. And even in the NASDAQ, with all the negative pressure on Oracle and all the negative pressure, they started off with the 3% gain or so in Broadcom, and now it's down about 4 or 5%. It's still embedded. So until it loses it, I still like the market overall. When I look at the Russell, this is the winner because, and just because, it's the small caps and they do well when the Fed cuts interest rates. Why did I have you take half profit? I didn't just make this up. Look at the weekly chart. You're right at the upper Bollinger Band. I used the weekly and the daily. You're overbought. And I said, hey, this is where you got to step out of some. If it keeps going, terrific. Nothing said it can't get over the Bollinger Band, but make it do it. And that's why I had you take half profit. In the eurocurrency, the market is up and over the 100-day average for the first time, and the Bollinger Band it got over yesterday, and today it's pulling back in. I teach you to never buy fresh into when that happens, all right? This is a resistance zone. That's all it is. It doesn't mean it can't go higher, but you're in your resistance zone. The same thing true of the Swissy. You got up and you went to the 100-day average for the first time since back here, and the Bollinger Band, just the way you did in the zone here, and the market is trying to pull back into it. In the British pound, the question is this going to become support now that you're over it, or is this still the resistance point and the market's going to slip back to the 3-day average of lows? Part of me thinks it's going to slip back and hold that 3-day average because you have an embedded reading. And until you lose the embedded reading, I'm certainly in the bullish side, not the bearish side. In fact, I'm on the bullish side of all currencies against the dollar that we cover in the futures here. Higher lows, higher highs in the Canadian. You've got your embedded reading. The market has not taken out yesterday's high. It hit it, but it didn't take it out. If you had a hard break, I take a good look at it at mid-session. Same in the Aussie dollar. If the market wants to slip back, I'm looking at it here as a potential buy as long as it doesn't take off. But I think I can wait to see the PCE spending numbers that come out at 7:30 and make a decision from that. If the markets get over the highs of yesterday, they're not a buy. New Zealand dollar stopping right at its first test of the 100-day average, the way it did here. Same thing. So that's why these averages come in and they're so important. So many people use them. Now, in the Mexican peso, here's what you know. Markets only stay over a Bollinger Band 5% of the time. Now, you wait. You let it pull back. You have an embedded reading. The market is a buy on breaks, in my opinion. This is, remember, we moved to the March. You can see you don't have a lot of good data to trade off of. It just became a viable contract to trade right in here. All the volume and open interest started moving on the 13th. And now here we sit on the 12th, as you can see, and I'm watching it do its thing. And you should be making your move to the currencies, to the marches now. I want to show you something. This is how I look at it and get an idea. I look at where's the volume. You see them on each one of these. So you make your move. The Brazilian real is always low volume, but this is how I go about it. And when I see that everybody's made the move, that's when I want you to make your move. In the Japanese yen, notice how the market is still stuck at the 18-day average. I don't think you do a thing here. The market is waiting to see what the Bank of Japan does or doesn't do, as there's a bit of a battle between the prime minister, who does not want them to raise interest rates, and the bank, who thinks interest rates might be appropriate to raise. So we have to see who's going to do what. That brings us to the dollar index. And as you can see, you're sitting here now on support at the 100-day average and the Bollinger Band. This is where the pros likely are covering shorts. You're oversold, not embedded. It's a good spot for them to be coming out. In Bitcoin, the market keeps coming back to the 18-day average and finding its support. It's certainly trying to develop some type of trend here. You got a lower low, higher high, though, when you're overbought. I don't see a thing to do. In the March bonds, no surprise to me that the market's down. It might even embed before it's all said and done. The market is still under the 18-day average and nothing but problems in it. The 10-year note is oversold in a downtrend, not worth pursuing on the short side there. Same in the 5-year. And in the 2-year, the market's holding up relatively better. I'm going to repeat. I think the pros are buying the 2, selling the 10-year notes. The gold-silver ratio, I made the move today. So now I'm tracking the Fed gold versus the March silver. We were trading, if you'll recall, we were tracking D's gold, D's silver. It's time to make the move, in my opinion. So you can still see it's looking pretty good as long as it stays under the 18-day average. Silver's gaining on gold in theory. In the gold market itself, it's overbought at the upper Bollinger Band. I'll let other people want to buy it up there. And in the silver, you have an embedded reading, which is, of course, very strong. And it doesn't give you a break to buy on. You're getting no pullbacks to the 3-day average of lows, so you have to wait. And each day, it's making higher highs early on. In the copper market, while Goldman 2 weeks ago put out that report that the copper that's not going to be able to sustain these levels, I'm not in agreement. I said it then, and I'm saying it now. Anytime I see supply down, anytime I see a country like China wanting to continue its program of constant production to support their economy, not internal consumption, but external consumption, copper gets a bid. And that's what I think is going on. In the platinum market, up and away, overbought up to the upper Bollinger Band. Cattle market. Now, I know that many people think this is a top right here. So this is your retracement into all these moving averages, the 50, the 100, and the Bollinger Band. It is a market that is developing a bullish embedded reading. Day 1, 2, it developed it on the close yesterday. Where I will get bearish the market is when it loses the bullish embedded reading. If it doesn't get through these highs first, that could be where the top of the market does lie. So you have to just keep your eye on it. But I don't see anything in trading it. And as you know, meat markets are very thin. They go and they just run on you. It's a very difficult environment to try to trade in. You'll notice I don't trade a lot of them. A lot of people do. It's not one of my favorites by far. In the corn market, you're back to the 18-day average. There's just no business. That's the problem. You're not getting any real big orders. We're getting some corn exports. I mean, I put them in my newsletter, but it's not one of these markets that's come alive. The harvest is sitting now in the bins or at the elevators, and American farmers want to sell this stuff. In the wheat market, you still have too much wheat. World wheat's still up pretty nicely, not in price, but volumes. And there's a lot of competition, and you see what's going on. Oversold in a downtrend, oversold in a downtrend in KC. And in the soybean market, I don't think you're going back down here. So I'm looking at this whole area between the 50, the Bollinger Band, the 100 and 200-day average to be the support zone. That seems to me a logical possibility. Why? Because you're not going to get more soy crop at this point. It's harvested. It's done. So now it's a question of how does the southern hemisphere crop come out? Is it going to do well? Will there be weather issues? You get those type of events. Do I think there's a big up move? I have my doubts about that because the American farmer is hurt, and they'll probably on rallies, and that's how you'll release the beans on the rallies. Meal market, as long as it stays like this, and it's a market that just fell apart just now. It just came from 333 and a half. That's 10% drop. And you're now into the support zone. So you're into the 50, the 200, the 100, and the Bollinger Band. I wouldn't be pressing the short side. And if you're breaking the beans in the meal, oil's not going to be the market that rescues it. And here, too, you've now entered the support of the 200, the Bollinger Band, the 50, rather the 200 and the 100. I don't see a darn thing to do. Then we come to the coffee market, which has been stuck forever at the 18-day average of closes. It just doesn't make a move one way or the other. Nothing going on there. We then get to the cotton market. And if the cotton were to take this number out, 64.35, you might get a move to 64.14, but you've narrowed in so much here. There was one play to go short here, come out against the Bollinger Band. You did it. You made your money. I had you do that trade, and now you're through. In the sugar market, sugar's trying to act like a market that wants to come out of this sideways action to the upside. We'll see if it's able to do it. When I was looking at the, we can go here to the weekly chart. And on the weekly chart, you're not ready there, but it's also not falling apart. So the 18-week chart's going to be fairly important on that. What can the market do there? Then we go to the energy markets, and they're trying to find their support at the lower Bollinger Bands, the big white line. You can see that in all these. That's what they're doing at this point. But these markets are bearish, not bullish. And I will stick with what I said. The IEA report, I believe more than OPEC's, number one. Number two, while it wasn't as bearish, they had revised it from as the super bearish level. They're still bearish. There's still a glut of oil. And the big question is oil going to go down to the $50 a barrel area in 2026? Not is it going back to 80? That's what I'm seeing right now. So we'll see what happens. And in that gas, I'm surprised. I mean, this is a market that just went in a straight line from 550. Today's a new low at 416. But my work worked out. Again, you're not, when you hit the Bollinger Band, you're taking money off the table. And it would have been right in this area. Yes, it popped one time higher, but boy, was that accurate. And it worked like a charm. So we'll see what happens. If you haven't taken my courses, folks, go on and do it. I mean, you learn a lot and you start seeing the principles that I give you. Am I right all the time? Far and away not. And that's what trading is about. But you're here for a reason. And I think overall, I'm assuming you're happy. Today was a good day. We've already banked some money right here. And now we'll see if we can get anything in the S&P done. I'm Ira Epstein. You have yourself a good day. I'll catch you over the weekend. Take care.